Internationally, a series of surprise actions by some of the world's largest central banks fretting about runaway inflation has left bond investors battered. Now, a growing chorus of investors is calling on policymakers to move fast to end the uncertainty. Until central banks are able to bring down inflation, some investors said markets will not have any certainty about rates. Here are the details of these and more from across the globe.
Central banks, especially the U.S. Federal Reserve, have faced criticism that they have acted too slowly in taming inflation. The U.S. Federal Reserve hiked rates last week by 75 basis points, its biggest rise in nearly 3 decades, and committed to delivering more big moves. Central banks across Europe also raised rates, in some cases by amounts that shocked the markets. The moves wreaked havoc in bond markets already in throes of their worst start to a year in history. Higher prices are bruising consumers by eroding savings, while higher rates increasing borrowing costs. Meanwhile, Australia's biggest building materials manufacturers are cutting operations, hiking prices and considering moving production offshore to manage a spike in power and gas bills, adding to pressure on the government to resolve the country's energy crisis. Power prices have surged in Australia amid a shortage of coal-fired generation due to planned and unplanned outages, which has driven up demand for gas-fired generation at the same time as gas demand for heating jumped during a cold snap. That has left Australia's $70 billion manufacturing sector, a major power and gas consumer, exposed to soaring costs, especially those whose cheaper long-term energy contracts are expiring. Finally, Russia has become China's biggest supplier of oil as the country sold discounted crude to Beijing amid sanctions over the Ukraine war. Imports of Russia oil rose by 55% from a year earlier to a record level in May, displacing Saudi Arabia as China's biggest provider. China has increased purchases of Russian oil despite demand dampened by COVID curbs and slowing economy. The imports into China, which include supplies pumped through the East Siberia Pacific Ocean pipeline and shipment by sea, totaled to 8.42 million tons last month. Terry Njenga, Prime Edition.